The number one mistake Americans make when a recession is coming is moving everything to cash. It feels safe. It feels responsible. But here is the uncomfortable math. If inflation is running at 3.8% and your savings account is paying 2%, you are losing 1.8% of your purchasing power every single year while feeling safe. Musk's wealth structure, heavily concentrated in real assets, productive companies, and technology, is the billionaire version of a principle any American can apply at any scale. You do not need to buy Tesla stock specifically. What you can do is ensure that your money is in assets that have historically outpaced inflation over time. Broad market index funds like VTI or VOO have returned an average of 10% annually over the past 50 years. That is not a guarantee about tomorrow. But it is a strong historical argument against hiding from recessions in a savings account. This is the lesson from Musk's 2008 behavior that has the most direct application to any American investor right now. When the market drops, and in a recession, it will drop, the instinct is to sell, protect, retreat. Every major study of retail investor behavior shows that the average American buys high and sells low, locking in losses during exactly the moments when patience would have made them wealthy. Musk did the opposite in 2008. He stayed. He doubled down. Not because he is reckless, but because he had a clear view that the businesses he owned were fundamentally valuable regardless of what the market said in that quarter. For you as an individual investor, this translates to one simple discipline: decide your strategy before the volatility hits. Write it down. I will not sell my index fund positions during a market drop of X%. Then stick to it. Because the single biggest wealth destroyer in a recession is not the recession itself, it is the panic selling that locks in temporary losses as permanent ones. Here is something the financial media almost never says clearly enough, and it is perhaps the most important recession lesson in Musk's entire financial history. Every major company Musk built or invested in heavily, Tesla, SpaceX, SolarCity, he built during or immediately after economic downturns. Tesla survived the 2008 crisis and went on to become a $1 trillion company. SpaceX was funded through the 2008 to 2009 period and is now approaching a $1.75 trillion IPO valuation. The recession was not the obstacle. The recession was the opportunity. Asset prices fall. Competition retreats. The market clears out weak players. And the people with discipline, dry powder, and long-term thinking are left standing in a field of discounted opportunity. You do not need $35 million to apply this principle. If you have $200 a month that you can invest consistently through a recession, buying assets at lower prices than they were 6 months ago, you are doing, at your scale, exactly what Musk has done at his. I want to close this video with something that I think gets missed in almost every conversation about Elon Musk and money. The reason Musk is worth $830 billion is not because he is the world's greatest investor. It is not because he times the market perfectly. It is not because he has information the rest of us don't have. It is because for over 25 years, he is committed to building things he believes are permanently, fundamentally valuable, and he has refused to stop when it got hard. Tesla almost died 3 times. SpaceX almost ran out of money twice. Musk himself said in a 2010 interview that he thought both Tesla and SpaceX had less than a 10% chance of success. He built them anyway. The financial lesson inside that is not about boldness or risk tolerance. It is about something simpler and more transferable. He never confused the price of something with the value of it. The stock price is what the market says something is worth today. The value is what it will actually be worth over time. Those two numbers are almost never the same. And the gap between them, that is where wealth is built. So here is the perspective shift I want you to take from everything we have covered today. A recession is not a signal to retreat. It is a signal to think more clearly. It is a market-wide moment of confusion where prices and values diverge more sharply than usual, and the people who understand the difference between price and value are handed an opportunity that does not come in normal times. Musk has lived through the dot-com crash, the 2008 financial crisis, the COVID crash, and multiple periods of high inflation. His net worth has swung by hundreds of billions of dollars in single years. And through every one of those moments, his response has been the same: keep building, keep investing, keep your eyes on the decade, not the quarter. That is the lesson. Not the dollar amounts. Not the companies. The time horizon. The discipline. The refusal to let short-term noise destroy long-term strategy. Before you close this video, I want to give you one concrete action step that costs nothing and takes 5 minutes. Go look at your current financial position and ask yourself one question: am I making any financial decision right now based on fear of the next 6 months? If the answer is yes, think twice. Because every major wealth builder in American history, Musk included, has made their most important financial decisions not based on where the economy is going in 6 months, but where the world is going in 10 years. The recession will end. It always does. The people who stayed consistent, kept investing, and refused to panic will come out on the other side in a significantly stronger position than the people who retreated to cash and waited for certainty that never comes. If this video gave you real value today, please hit that like button right now. Subscribe and tap the bell. Every week we break down exactly how the world's most successful financial minds think and what that means for your money. I'll see you in the next one. Before you go, 10 seconds. Hit subscribe and tap the bell right now. Every video on this channel is free, and this content takes real research to produce. 10 seconds. Go ahead. In June 2025, the world's richest man, the man worth over $830 billion, posted 3 words on his own social media platform that most people scrolled past without a second thought. 3 words that, if you understood what they meant for your money, should have made you stop everything. He wrote, "Recession is coming." Not a think tank. Not a Wall Street analyst. The man who owns Tesla, SpaceX, and XAI, a man whose entire financial world depends on the economy staying strong, said, "Recession is coming." And yet, in the same breath, he didn't panic. He didn't sell everything. He didn't move to cash. Instead, he kept building. My name is Sam. And today we're going to look at what Elon Musk's actual financial decisions tell us, and what those decisions mean for your money right now. Now, before anyone says, "I'm not a billionaire, what does Musk's money have to do with me?" Let me stop you right there. Because this video is not about copying Musk dollar for dollar. It is about understanding the principles behind how someone who has built wealth from scratch, twice, after nearly going bankrupt, thinks about protecting and growing money when the economy gets uncertain. The lessons are not about the scale. They are about the mindset. And those lessons are available to any American with $50 and a brokerage account. So let's get into it. Here is where America stands right now in June 2026. The Conference Board's Consumer Confidence Index just dropped to 93, the lowest since May 2020. Inflation is still sitting at 3.8%, well above the Federal Reserve's 2% target. The new Fed chair Kevin Warsh inherited an economy that is not technically in recession, but for millions of ordinary Americans, it feels exactly like one. Gas prices up. Groceries up. The job market slowing. Tariffs creating uncertainty across every industry. Musk called this over a year ago. The question isn't whether he was right. The question is, what did he do about it, and what can you do about it? The first and most important thing to understand about how Elon Musk structures his wealth is this: almost none of it is in a savings account. Almost none of it is sitting in cash. His wealth, as reported by Forbes and verified financial sources, is almost entirely made up of ownership stakes in companies he built or controls. Tesla, SpaceX, XAI, Neuralink. The Boring Company. What does this tell us? It tells us that Musk's fundamental financial philosophy, whether he has ever stated it this simply or not, is that real assets beat cash, especially during inflation. When inflation runs at 3.8% like it is right now, every dollar sitting in a savings account is quietly losing purchasing power every single day. Ownership in real, productive businesses is one of the few things that can outrun inflation over time. Now, can you own SpaceX? No. Not yet. Can you own productive businesses through index funds and ETFs? Absolutely. And that is the principle worth taking from this. Here is a pattern in Musk's financial history that shows up again and again and is worth paying close attention to. When Tesla was nearly bankrupt in 2008 during the financial crisis, Musk put in his last $35 million, money he said was essentially everything he had left after the PayPal sale, to keep the company alive. When SpaceX had 3 consecutive rocket failures and was weeks away from running out of money, he funded a 4th launch attempt. When the economy looked its darkest, Musk moved forward. Not recklessly, not blindly, but with a clear view that temporary economic pain does not destroy permanently valuable businesses. In February 2026, with recession fears at their highest, SpaceX acquired XAI in a deal valued at $1.25 trillion, creating one of the largest private company mergers in history. While consumer confidence was falling and Americans were worried, Musk was consolidating, building, expanding. This is not a coincidence. This is a pattern. The most publicly documented aspect of Musk's financial philosophy, in interviews, in shareholder meetings, and his own statements, is his long-term time horizon. When asked about Tesla's stock price volatility, Musk has consistently said the same thing across years of interviews: the short-term price is noise, the long-term value of the mission is what matters. This is not a strategy that sounds exciting. It does not make for viral headlines. But it is precisely why someone who started with $175 million from the PayPal sale in 2002, and nearly lost it all twice, is now worth over $830 billion in 2026. Not luck. Not timing the market. A 2-decade commitment to building things he believed would be more valuable in the future than the present. The recession-era lesson here is simple: short-term panic is the enemy of long-term wealth.